Right, thanks. Okay, thanks everyone. Oops. Okay, hi, I'm Michael Chu. Yeah, I joined this meetup group. I think probably last November, and thank you, Stephen, for having me here. And I'm basically going to showcase my investing and trading strategy and my philosophy. Um, and yeah, so just a quick disclaimer: all the information here are only for informational purpose. I'm not a registered investment professional. You guys can hear me, right? And see my screen. I just want to make sure. All right. And so just a quick intro. I've been investing on my own, and then I found McBoss Capital, and really is to showcase the research and investment strategies that I use for education purpose, and also in general, I use this strategy to manage my own personal portfolio for both short term as well as long term. I'm a computer engineer by trade. I build web applications for enterprise, and I'm building a new tool right now that I'm using, and I'll showcase that as well. Um, I started out investing in mutual funds in '03. Didn't really know what I was doing. By 2005, I started investing in individual stocks. Learned a lot of lessons there, including buying like little cap stocks. Lost a lot of money. Uh, Subscribe to many services out there just to understand how people do things. Not much success. Um, and then I invest in low quality stocks, and yeah, as I already mentioned. And then in 2007, I got a book by William O'Neill, How to Make Money in Stocks, that I got as a Christmas gift, and it was quite opening my eyes because I learned a lot about growth stocks, how different stocks are categorized for different style of investing. Um, and today, I still base all my strategies, based on IBD foundation, including canceling methodology, but they have evolved quite a bit, just for different style of investing. So, just want to share my goal and philosophy. When I learned about IBD, I've already lost a lot of money by that time. Again, this was back in '07, and I knew right away, and I also knew people that I wasn't too old at that time, and I knew people who are my dad's friends. They some of I actually knew two people who have personally went bankrupt, and then I also knew my dad's friends who have lost a lot of money during the 2000 bust. So I knew right away one thing. If there's any strategy I'm going to follow, the first thing, it has to preserve capital. You cannot get caught in a downtrend. That's probably my number one rule. Number two, and then try to grow my portfolio, right? That's the second thing. How do you maximize your gains in an uptrend? So a couple of strategies that I will talk about is obviously very generic, but I'm going to dive into the details. One is market timing, and a lot of people have trouble with market timing. And it's not easy. You need all the data that you can to do it, and then entry and exit level, like how do you enter and how do you exit, how do you find the low risk versus high reward kind of level. And that's also not simple, because every stock trade differently. So those are a couple of things that we have to keep in mind. I'm going to stop for questions in a second, but I'm just going to keep going for now. So first, I'm going to talk about market timing. Um, like I said, the most important thing is to avoid the bear market and preserve capital. So as I mentioned, I started learning about IBD in '07, and they have a signal, as most of you know, the big picture, and they kind of have their own methodology on how to use the indexes to determine whether the market is in the uptrend or in the correction. So that can help everyone a lot, right? So that's very important. So through my own career, investing career, I have gone through all these cycles 08, 14, 16, 18, 20, and then now the most recent one, corrections, right? So and uh, so then the next question is, can you outperform the market, right? So when the market is in a bull cycle, are you able to do better than the general market? If not, and I think Liz already mentioned, you can buy the index because the index in general has been proven over many years to bring in around 10 to 12%. And if or some people likes to follow Warren Buffett, like the last weekend's annual shareholder meeting, there's lots of people who follow Berkshire Hathaway, and you could gain about 20% over the last 40 years on an annual basis. So I think stock market, for most people is a very hard thing to do because I've been there. I've spent a lot of time on it. I know that, for most of you, probably the same thing. It takes a lot of time and effort, and it also takes a lot of understanding about the whole market itself. Sure, sometimes you can get lucky buying one or two stocks that, you know, for example, Apple, and do really well, right? But in most cases, it's not as easy. Um, so, so if you want to beat the market, you have to know how to time the market. So one of the things that I do, I knew from learning from others, including Bill O'Neill himself. He studied the tape, meaning he studied like how um, the stock move, right? What is the volume, what is the price? So we are looking for accumulation and distribution signals, right? And so that is very important in order to time the market. So I already mentioned about the IB signal that can help you. So so yeah, I'm going to talk about accumulation distribution for a second. So I have built my own proprietary algorithm to detect the stock accumulation under distribution signals. I launched it since January 10, 2022, which is early this year. And I have used this signal for a long time. I just haven't actually used it in the software. Um, it is based on about 2,000 high liquid stocks with greater than $15 million daily traded. And the signals are based on high volume movement and also strong price action. Um, and then we can monitor the sectors and industry groups as well based on those stocks and which are under accumulation distribution. So I'm going to do one demo and then I'll pause for question because before I don't want to lose anyone here. So I'm just going to show a quick demo here. So I only did the last 2 months just because uh, I don't want it to get too messy. But what you see here is the Nasdaq here. So here's the Nasdaq Index. And then we have stocks that are under accumulation and stocks that are under distribution. So this is since like basically March to April. And what I'm going to show you here is, so the blue line is Nasdaq. Okay, for the last 2 months, for those who doesn't know, what happened was in March it started coming down, and then near the end of March or mid March it started to go up, and then by I believe end of March it starts to go down again pretty hard, right? So that's what's happening. And if we look at sorry, I'm just moving my Zoom window here. If we look at the orange line, that's how many stocks that are under accumulation. So probably the one most important thing that stick out right here is this point right here. So at some point here, we had 666 stocks under accumulation on March 18, right? So we saw this spike in Nasdaq, right? As it goes up, you see that spike. And unfortunately, what happened here is that it kind of dropped that right after. So that within a few days, it dropped that. It's kind of a big sign that there just isn't any strength in the stocks continue to be accumulated. Usually, when stocks are being accumulated by institutions, especially, they last for weeks. It's not a 1 or 2 or 3 day thing. So that's a big sign that And it's not just like as you fast forward for the next 2 weeks, you didn't see anything. I think the highest here was like 216 stocks under out of the 2000 I mentioned I monitor that got accumulated, for 1 day kind of thing, right? So it's really a big sign that we have that is not going to go much further. So that was something I just wanted to showcase here. And then you can see this big selling here. And then recently, you also, uh, as Stephen indicate with the new lows and stuff, we also saw lots of distribution recently. So now trends always do change. So that's why I don't like to see a long chart, because things change very quickly. So one of the things I look for in terms of market timing is I like to see like 1 to 2 weeks of accumulation. So I like to see like this orange line actually stay up here. Anything between 3 to 500 is usually where I feel very comfortable starting to invest lots of money. And we haven't seen that in the last 2 months. In fact, I haven't seen that since late November. So this is definitely a sign of you know not enough strength right now. And as I don't have this charted right here, but I do have the data for yesterday and today. You can see um, the distribution is still way over than the accumulation. And again, the numbers are really tiny to even make it significant. So like I say, I like to see numbers between 3 and 500. So the bottom chart here is similar. It's just using the industry groups. So what I do is I use IBD industry groups and the 197 groups that they have, and I map it to whichever industry group. And so here shows you how many industry groups are under accumulation, how many are under distribution, and then so you can see today it was quite even. There's about 34 accumulated and 33 being distributed. So again, like even though today was kind of a flat day, yesterday was an up day for the index, but look at what happened, right? It's only 10 groups under accumulation and 24 groups under distribution. Sorry. Yeah. So in like it is a proprietary algorithm, but one of the things that I look for is high volume. It definitely have to have high volume trading. It also have to have strong price actions. For example, it needs to close strong, right? It cannot close at the bottom of the day, kind of thing. So those are signs of accumulation, and I do use a weekly prorated signal, meaning like it's not on a day by day to reduce the noise. So when I do my algorithm actually account for prorated weekly comparison rather than the day-to-day comparison. So it's just to help reduce the noise so that you have better sense of the accumulation or distribution signal. Correct. Yeah. Yep. That's right. Yeah, I'll continue to pause here because I know I chat a lot so far. Any questions about the market timing? Like, that's what we're trying to do here. We're trying to time the market so that you can get in with more confidence and scale your portfolio, right? Uh, so I have been around less than 20%, kind of like Steven, in terms of trading. I'm probably less than 5% today. But in the last 2 months, it's between 5 and 20% of trading. So that's where I'm at today. But when I start to see, and we did see that, so from like, so right here, we did see some strength, March 14. If we go back to March 14 here, we can see some pickup here. It wasn't that good yet. So March 14 and 15 wasn't that good. And then we see that, on March 16, you see 300 to 50, 300 to 20, 600 to 40. That's the kind of strength you want to see. But I'm trying to say is the next week after, it drops back down significantly to hundreds, right? So it drops back down to right here, and that's not a good sign because generally when accumulation happens by institution, it happens for weeks. Is what I'm trying to say, and we didn't see that. Well, no, if the signals change, then I scale in as the market trend change, right? Yeah. So like I said, you can see from the graph here, right? So this is the index of the Nasdaq. So as it was going down, like even before it goes down, we didn't see any accumulation, right? Yeah. Go ahead, Steven. Yeah. And that's the thing, right? Like I follow IBD strategy to the T in most in terms of fundamental. We don't try to predict, right? We interpret, right? So just like IBD, if they have a confirmed uptrend signal, you start to scale it, right? And so I use this same way. If it starts to show 300 to 500 stocks being accumulated, especially as days go on, then I start to scale in, right? So generally I'll be if I see 300 of to 500 stocks being accumulated for let's say 2 weeks in a row, like every day for 10 days, I'm usually 100% in by that 10th day because each day I'll be in 10%, right? So that's usually how I scale in, right? And if it like in this case, if I scale in like say 30 to 50% here, and then I notice this, right? Then I'm starting to doubt this uptrend is for real, and that's when I might, and then you probably see it, and the good thing was it went for another 2 weeks, right? But what I'm trying to say is it gives you a chance to think about, hey, something's not right, right? Maybe I need to start to think about scaling back because I'm not seeing the 300 to 500 stocks being accumulated. So that's just my thinking, right? Again, I'm not using this to predict. I'm just using this as a mechanism to scale in and scale out. So yeah, you can't tell what's going to happen, 1 month from now. No one can. So uh, so that's the whole idea behind this. Yeah. Not market cap. Not market cap. It's what they call a dollar trading. It's called the amount of dollars being traded. So you take the volume times the price, right? So IBD used roughly 20 million. I use 15 million, just a little bit slightly lower. And so you'd say stock is 500 has 500,000 trading volume per day. on average. And then the stock's $30. So 500 times 30, 500,000 times 30 is $15 million trading volume. Okay. Yeah. 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 And that's the thing, right? Like there's no perfection. Just like the individual chart, and so same as this analysis, there's no perfection. You're not going to get 10 days straight of 300 to 500 stocks being accumulated. That's about 20 to 25% of the whole stocks I monitor. That's significant. But you might get 10 accumulation like of 300 stocks over like 2 month period. But we're not even seeing that right now, right? That's what I'm trying to say. So we're nowhere near a bull market right now, right? We haven't seen that. Look, we haven't seen that for over uh, quite a long time now. Yeah. No, no, no. Yeah. It's just like I said, it's very similar to IBD, right? Because they use the index and they use like follow through days, and those follow through days usually coincide, and I'm pretty sure it's probably somewhere near here, coincide with strong accumulation. But they don't look at many days, right? They just follow the follow through day, and then they kind of stop following that, right? And then they just look for distribution, which is another that's another way of looking at it. So you can look for distribution, and we didn't see any distribution. That's why IBD signal can be late, right? They can be late because if there's no high selling, that's why they call the correction very low, like close to the previous low, because they couldn't detect that. And that's nothing wrong with that strategy. That's just how that strategy works. But with this, you could see that there's something wrong because we didn't see accumulation. And when you don't see accumulation, that's also a sign of weakness, right? Which means something is wrong with the market, right? Okay. Any other questions about this market timing signal that I'm using? Um, mhm. Yeah, yeah. The groups, you talking about the industry group? Because yeah, yeah, because you want to see strength as a group, right? Generally, when the bull market happen, we see lots of groups, in a bullish trend. You don't want to see like, a very low number of groups in the bullish trend because the market cannot sustain itself in a broad rally. In order to have a broad market rally, you need to have lots of groups taking participate in this uptrend. Does that make sense? So the more groups, the better. And it's hard to and just so for example, like I'm just using this as a quick example. Like you see, both numbers are big, right? It doesn't tell me much, right? Because they're both big, right? But if there was something like here, March 18, 117 to 7, that's near this point right here. So there's lots of groups being accumulated. But like I said, if you follow through and look at the next week, there's no more strength. There's not there's maybe one day here. Uh, it's not bad, but it's not like significantly more powerful than like here, right? You should be seeing like, I don't know, 40 to 50 groups every day at least. It's not happening. That's another problem. So cool, cool, cool. I so I do have both short-term and long-term portfolios. If that I don't usually short. Um, yeah, that's not my style. I do short only if I want to stay away from the market, just to prevent myself. But I don't like short anything like significant. But you can definitely do shorting. I know some people do. Okay, I'm gonna go back to my presentation again. Actually, where was I? Okay, so I have one more demo actually. So once you have like a general understanding of what the market's doing based on those signals that I just showed you, then the next thing is kind of to dive in, right? Dive in to look at what does it look like in the detail. So like what are the industry groups? What are the stocks that are being accumulated and distributed? So I'm gonna, so this is a tool that I have, but I'm gonna jump to the report section, and I already did the report for today, March 3rd, and you can see here today we have commodities area, oil and gas, U.S. exploration production. Like, so if you follow the spider sectors, you notice today energy was number one, very strong, and you can see the stocks here that are being accumulated. Um, there is no distribution because usually like if there's distribution you will see like for now I just have it labeled B and S for buy and sell, but really it's accumulation and distribution. So there's no stocks under distribution in this group right now, but here you can see there's one here, right? As you scroll down, it's sorted by number of accumulation, number of stocks being accumulated. As you scroll down, it gets lower and lower, and and then by at the bottom, if you want to find out, which groups are being sold off today, and I'm sure you guys follow, a lot of travel stocks today got sold off, right? Lots of them, including Airbnb, but they did well after posting earnings after hours. But today, I think Expedia was hammered, right? Um, so you can see like which group and which stocks are performing poorly today. And IBD has similar type of signals as well to deal with their industry group. But one of the things that I like to do is every day I look at this and I look at the spider sectors and I kind of follow them. So if spider sectors say, hey, commodities doing well today, then I want to look at the commodities today. Right? All the commodities here. Here you go. See, there's at least five in the top 10 today. And then if technology, there's one here on the semiconductor and AMD did well after hours, so that's interesting, right? Because it looks like the market were anticipating some good news, um, and what else? And also manufacturing, right? So it looks like the chip stocks are, yeah, I haven't seen this in a long time. It looks like the chip stocks are gaining strength again. For a while, it's just keep going down in the last 2 months, but this is very interesting. So that's what this could provide, the details of what we're seeing in the high level just now. And yeah, so so I have like just share my history, right? For the last probably 4 to 5 years, I was working on this algorithm, and like I said, one of the main things I know very successful investors do is they study the tape. And when I read those, including Bill O'Neill, and when I read that, I was like, okay, I have to learn how to read the tape. And so I follow a lot of the IBD Foundation, like how they read the chart, how they read accumulation signals. I don't know exactly how they do it, but I have a rough idea how they do it. So I've been doing trial and error on my own for the last 4 or 5 years, and this is where I'm at today. Like this, yeah, yeah. This is my software. This is the software I'm building right now. Yes, that's right. Yeah. Okay. All right. Any? Yeah, yeah. I have to subscribe to data. Yeah. I'm I'm glad you asked. So one of the signal I follow very strongly is the 10-day moving average. Um, and I'll show you in the chart right now. Because so let's say we take AR for example, right? And this is AR right here, and this is a oil and gas stock. And you can see this 10-day moving average, right? One of the things that I use a lot is a distribution curve that measure how far above the 10-day moving average the stock is currently at. So if you look at this is based on 1 year time frame. So if you look at the last year, look how many times, every time the blue bar climbs above this 75% distribution, it means that that's where it climbs above. So it doesn't happen a lot, right? You see, right? So here it climbs above it. It always what I'm trying to so why I follow this signal so much is because what I notice is every stock always comes back to the 10-day line. It's just a matter of time. Very few runs away. Very few. Uh, so if you want to enter at a proper point, which I'll talk about next, is then you need to follow 10-day moving average. So by having this right here, it tells me, hey, right now today, right? Today, and I'm gonna turn on my accumulation signal here. So today it is accumulation day. It's interesting. We haven't seen an accumulation day for like 2 months or something, right? Look at this right here, right? And we haven't seen that since here. So this is accumulation. The blue dot means accumulation, and today we saw it, and and it's slightly under the 75% distribution curve. The reason why is if it's too high above, which is 10%, look at that. That's 10% above 10-day moving average. So if you buy too high above the 10-day moving average, you have a high chance of getting pulled back, right? And when it pulls back, depending if you use stop loss or not, you might get kicked out. So that's the reason why I use that signal a lot. Does that make sense? Yeah, yeah. I tend to if like there's a group like this, I tend to follow the ones like I'll look at the ones that are like less, just because if it's 10% or 8% or 7%, there's a high chance of it pullback, and you can put it on your watch list and hope that will happen. But they generally do. 80% of them pulls back. Just because it happened, that's the one that happens the most, right? When it pulls back, it tends to pulls back to the 10-day the most. Because it doesn't always go to 20-day or 50-day even harder, right? Again, depending on your trading style. But yeah, okay. Any other questions on this topic? I'm gonna move on to my second part of the presentation. So as you can see, okay, so I'm gonna go back to my full zoom, full screen mode. Oops. So yeah, as we can see, we first we learn about the stocks. We study the accumulation distribution signals, and then we kind of lead goals up, right? Like, okay, which industry groups are gaining strength, and you might want to, because I've over my years trading with IBD, I've learned that the most successful trading behavior is to use follow the group. When the group is strong, it's the fastest way to make money I found, right? Because the group are just when one stock is strong and then the second stock is strong, the third stock is strong, as they climb, they all support each other. And we saw that in energy this year in the first 3 months. And that's why you want to follow the industry groups. And then we saw how it leads to helping to time the market too, right? So I always use IBD picture to confirm my trend as well. And I also use SA spider sectors to confirm my trend. So those are the things that I also use to confirm it. So you can obviously use many signals to confirm what your thoughts are. So before I talk about the second strategy, which is really about timing your entry and your exit, you really have to understand what kind of, are you a trader or investor, right? You cannot trade short term and long term at the same time. A lot of people do that, and they'll have one account, they'll put all the same stocks in there, and then sometimes they'll trade it short, sometimes they'll get it long, they usually they'll do long when they're not doing well because they're losing 10, 20%. They're like, okay, I'm just holding it. I'm going to do it for long now. So that's not how you want to trade or invest because um, it really could ruin your strategy, right? Quite a bit because it's not consistent, right? And you're not being using a rules-based system. So you need to understand that. And then once you understand that, then you can learn how to okay, when do I cut losses? When do I sell, right? Do I sell? Because if you find yourself always selling too early and selling too late, then you know you don't have a discipline to build those rules around how to sell. So you need to understand if you're like a day trader or a swing like really short period like 1 day 2 days you need to go for short profit like 3 to 5% or even if you're a day trader you might even go for 1 to 3%. If you're a short term like IBD string trader like they have a program for that they go for 5 to 10%. So you need to understand that hey that's what I can achieve 5 to 10%. Or like most people in IBD style of investing they're usually one, two, one quarter kind of thing. So they're looking for 20 to 25% profit. As you need to learn about fundamentals because you're investing for a slightly longer term, and you need to understand those things. And then so if you're long term, then you're going for bigger profit. You're going for maybe even double your money, like 100% profit in a year kind of thing, right? That's when fundamentals really matters. That's when you need to have conviction on the stock because, as you know, stocks go through cycles during times. So if like right now, if you're holding a stock that's under the water, are you going to keep going at it? For example, I hold Nvidia on my long-term portfolio. Well, do I keep going with that, right? So you need to have conviction of the fundamentals. So just, I won't do a survey here, but I just want you guys to understand, like, you need to know where you're at. And so does that, yeah, it could be, yeah, yeah. Like everyone has it defined differently. If you look at the federal they define for tax purposes 90 days, right, for investing. So, it's really a loose term. I'm just using for my own purpose. That's what I consider investing, right? Like for because most IBD rallies are around 2 months to 4 months before correction happens again. So that's where really the 20-25% rule comes in. So I still consider that investing because that's what IBD calls it. But yeah, it's just a definition. Go ahead, Stephen. Yeah. Hmm. So yeah, and any other question before I continue? So I just want to reiterate, like, this is really important in regards to what I'm going to talk about next, because what I'm talking about is really how to sell, and that's where most people have problems um, selling, right? So in order to understand where your lower risk and high reward ratio is, we need to understand what's an uptrend. An uptrend basically have highest highs and higher lows, and it constantly have pullbacks, right? And I'm going to show a quick picture in a second. And you need to look for like risk for reward ratio of 2 times, 3 times, 4 times or more, right? So you need to have that upfront, all those rules set, right? Otherwise, you don't know when to sell. And then you need to ask yourself like how much you're willing to give up from peak to trough, and then coming back to the peak again, because that's when you need to define where's your defensive selling rules. Because if it drop too much, hey, it might not come back to the peak again, right? It might not go to new highs again, or it's running way above average than normal. Well, are you going to take some profits? You need to have some offensive selling rules as well. So if you follow IBD rule, like they use 7 to 8%, which gives you a 20 to 25% reward based on 3 to 1 ratio, and depending where you are in your trading or investing style is, you might have lower risks, right? You might have 5% risk, which give again going for a 3 to 1 ratio, you might go for 13 to 15%, or you are a really ultra short term. Maybe you only want to risk 1% for a 1 or 2 day kind of trading, and you're going for triple, right? Like 3%. That's fine, because you're tripling what your risk is. And if you know who Mark Minervini is, this is where I really learned a lot from him. Is following this rule is that you always have to at least have close to a 3 to 1 ratio to be successful. And he's the top investor last year in the championship, right? For the third time or fourth time or something like that. It's incredible how he uses this. It's a mathematical problem. Once you understand this, you will improve your trading a lot, like significantly. I've already seen so much improvement in my trading just because of this rule. So I really want to, hammer on this rule right now. So if I can show you a quick picture, just to go further with this explanation here. Just 1 second, let me pull up my chart. So this is a very simple chart. Oops, I need to open a notepad. Paint, sorry. Yeah, so this is a typical, downturn. And then at some point, in my case, I use accumulation signal. And if I see accumulation signal, and let's say this point right here is the accumulation signal, and I'm going to buy in. Now, once you buy in, the question is, let's say my goal was, let's say I follow the IBD stuff, the 7% to 20% risk reward ratio. And I set my stop loss here at 7%. Sorry, I'm just trying to find my cursor. Okay, so here's my 7% loss, right? So if you follow IB strategy, that's where I'm at. Now, if it dropped below here, then I'm covered, right? That's kind of why IBD tell you, this you should have a risk. You don't have to put a stop loss, but at least like manage it. That hey, that's your 7%. You need to cut your loss if it falls below. Because at any point in time, once you get in, you don't know if it's gonna fall down. You could be here. Like for all we know, we could be here. Like you just thought, hey, maybe this is there's a accumulation signal here, and you thought, or whatever signal you're using, and you thought, hey, this might be a new uptrend here, but you were wrong, and it keep going down, keep going down. So it's really to again preserve capital, right? So then the next thing is you need to learn how to decide when to sell, right? So again, you're gonna have your defensive sell, and then you're gonna have your offensive sell. So here, well, it's not really where it's not 20% yet, but I'm not going to sell yet because it hasn't hit my 20%. So then you're going to define then as it goes back down again, now you're looking at, well, is it going to hit my 7%? Well, it didn't, and it goes up here again. So every time it pulls back and it goes up, make a new high and it comes back down, make a higher low, that's a good thing because then that means it's in an uptrend. But at every single moment, you have to have a rule that tells you, when do I get up? When do I sell? Because if you don't, mhm, yeah, 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 yeah. Well, that's the whole point of what I'm trying to say is that there's really not there's nothing you can tell whether the where you buy is going to be successful, right? So that's why you always have to, number one rule, preserve capital. How do we manage the risk, right? And so when you manage risk, right, then you need to define what's your losses going to be, right? And that's your own rule. You can decide. It could be 10%, it could be 7%, it could be 3%, it could be 5%, it could be even 2%, right, or 1%. But so just to answer your question, as I mentioned, I use my accumulation signal, right? So if I have accumulation signal and I like that stock, then I might buy it that day, right? So does that make sense? Generally, that's how it should work. Generally, that's how it should work. Um, yeah. Sorry. So again, so again, the probably the more important thing is not when you buy, right? It's more when you sell, because how do you know that it won't fall apart, right? And that's the challenge, right? So then we need to start defining where our offensive sell rule is, right? So that's the next thing. Like, you need to say, hey, my offensive sell rule is that if it goes up too fast, maybe 5% or 10% above your buy point, or even above the 10-day moving average, maybe that's you could define whatever you want. Maybe you want to sell some, right? And as it moves higher, as it makes those peaks, you might want to, again, like, as because you can't see the right side of those peaks. You don't know how far it will go, right? But you need to have a rule. What's your offensive selling rule? Meaning selling into strength. You need to define that, because if you don't define that, you will never be able to take profit or even smaller profit. You either make 20% or you don't, or you could lose 20%. You need to define some rules to manage those risks. And then the next thing you need to define is where's your defensive sell line, right? Where do you want to sell when things are starting to look bad, right? Like like, let's say you were up here. Well, do you really want it to come all the way back down to this 7%? If that's where you say, hey, I'm, because there's a lot of stocks that go up 10-15%, hasn't reached a 20%, and come all the way back down. And it happened in the last 2 months a lot. I saw it. So again, you need to have offensive and defensive selling rules, right? So that's how you can minimize. Yes, everyone wants to make that 20%, but it's not as easy as it looks, right? Because it's just that's just how it is, especially in a tough market like right now. So, any other question about that picture? I just want to talk about the selling rules kind of thing. So yeah, once you define that, then you can do a lot. Then you can do a lot better, I think. So you learn to cut losses. You can use stop loss, or if you don't have time to monitor, um, probably the most important thing is this, right? Admit you are wrong, right? Um, Capital preservation is the key. Okay, if you get stopped out, understand that the market is trying to tell you something. Generally, when the stock in a good uptrend, stocks tell you, usually once they break out, they start to move. They don't come back. Well, they do come back, but not like really far. Is what I'm trying to say. It can also rebound, right? So it can drop and then it can also rebound. So if you have your stop loss and you got triggered, that's fine. You can always buy it back, right? That gives you a time to think about it. You know, if especially if you have, like, say, 10 stocks and 8 stocks got triggered on the same day, what does that tell you? Well, you better not go back in right away. Maybe there's something wrong with the market, right? So these are signals that the market is telling you. And so cutting losses is a huge deal, especially if you use stop loss. But more often than not, especially in the last 2 months, it just keep dropping. So not only did it trigger your loss, but that's a good thing if you have a stop loss. But otherwise, it might keep dropping and dropping and dropping. Um, Move stop loss, and I didn't talk about that in the last picture. But as it moves up, as it forms the lows, right, a higher low, and it goes back up and make a new high, especially a new peak, you should move your stop loss up, right? To capture those profits that you already take. So you might be only up, let's say at the peak it was up 10%, it comes back down to 5%. And then at that 5% level, you know, as it starts to move back up and make a new high again, you can move your stop loss to that 5% and capture that 5% profit, right? So um, this is a really big rule. Never turn the profit into loss. Never, never, never. That's something that I have improved significantly because of this rule. I always move my stop loss up. Defensive selling, as I mentioned, selling into weakness, look for the last support level. And everyone define technically differently. So, you know, I have my own way of defining what a last support level is. You have your own way. Just find some way to define it. And then have a defensive selling rule. Same thing with offensive. Everyone's different. Like I mentioned, I use 10-day moving average. So as long as it goes above 75% distribution curve, meaning it happened, you know, for 75% of the time, where is the 10-day moving average? If it goes above that, then most of the time it's way too high. So I need to take some profit there. Um, Also take into consideration how liquid the stock is, because the less liquid it is, the more volatile it is, the more pullbacks you get. And the pullbacks might not look very normal, like the chart I show you. It could be very ugly. And how do you handle those? Because that's important as well. Because not every stock goes in a nice, you know, pullback motion and hit that 20%. So that's very difficult as well. Any questions before I go into like showing the demo? Okay. Yeah, exactly. I'm going to do a demo on some of the signals. So on the software I have here. Oops. So we can use AR as a good example because that's the top stock today. That's the first stock we look at today. So I already show you the accumulation distribution signal. So I can turn on the buy sell signal here. So this buy sell signal again is where is, you know, everyone can have different buy rules, different sell rules, and you define your own buy rule, right? For me, I just look at the first accumulation. So when there's a first accumulation, which was January 10th, that's when my signal came live on this software, and that's when I decide to buy, right? And then using just a simple rule, right? Like, hey, first accumulation signal, and then right here you see there's a sell signal. And why is there a sell signal? If I draw you my offensive defensive line here, it's probably hard for you guys to see, but there's a pink line here. Basically, that line got triggered right here, right? This is a structure here where there was an inside date and it fell below that, and so then it triggered the sell, right? And then later on, we got another buy signal here, and again we have accumulation signal, therefore we buy again, and here it got triggered again. So you have to remember we're in a very tough market right now, so a lot of the accumulation signal may not work in terms of because there's lots of volatility, right? So depending on what your selling rules are, it could get triggered a lot. So everyone is different. So I have very tight selling rules, so I get triggered quite often. So here we have another up signal here, accumulation signal, and then it goes up to here. So I can show you the table here based on that, just to show you in this example what happened, right? So the first one, 1% profit, 2% profit. The third one, which was from here to here, is 21% profit. And then here it just got triggered right away, and then it just have a 1% loss, right? So it didn't capture anything from here on to here because one of the things that you can probably see here, there wasn't much volume. There's no accumulation signal, right? Now, again, like I said, in this example, um, the trigger is where it's tight, right? So I'm going to show you another example using the same stock. What if you loosen your selling trigger? Like maybe I say, yes, go ahead. Sorry, I think I lost you the last 5 seconds there. Can you repeat? Yeah, yeah. Yeah. So no, you got it right. So that's the thing. This is the whole reason why I built this. I'll just give you a backstory why I built this software, right? One of the things that I do a lot, I was using MarketSmith. I think all you guys know MarketSmith. And one of the things that I was using MarketSmith, I love MicroSmith's chart, right? So I'm not selling their chart, but I'm just saying I love their chart. And one of the things that I was looking for is the ability to mark my buy and sell points. And I was doing that like using the markup tool. And I have my own rules, right? So I know my rules, and then I was marking them on the chart. But I find it very cumbersome, especially if you trade a lot, right? Like me, I trade a lot, so it just takes too much of my time. So I was saying, well, why, like I can build software, so I like why not build a software to take in buy and sell rules, and then just chart it for you based on your own buy and sell rules, and that's what I did here. So the question, so just to answer your question, there is lots of accumulation signals here. Look at that, right? The problem was my selling rule was so tight that I got knocked out right here. This little blip here, I got knocked out. Yeah, I got my 21% gain, right? But I could have gained more. I could have gained another 20% here. So I want to give you this example. If I don't know this example will work, but if I show you another example, I can give you like I loosen up the type. I don't think this will work, but let's just see. Because I think I checked it out earlier. So here I loosen up my selling trigger, and it still didn't capture it, right? It still didn't capture it, right? Because it just didn't have any accumulation here, right? But you could define your own sell rules because again, it's all based on structure. Like when I define my sell rules, based on really like some structure got broken, and so there's higher risk, right? But I just want to show you quickly here. Just for it won't take that long. Okay, I'm just gonna update. Yeah. So here's another example to showcase what I'm talking about. Okay. So here you can see there's lots of tight trading here, and you get triggered because it just go back and forth, right? And then we have this big run here. Okay. We have this big run here, and it captured 29%. And then it capture only 2% here from here to here because of the volatility, right? Because it triggered right here. You see how fast it dropped. So, but this example is based on just trigger on the first sell signal, defensive sell signal. If I move to like a second configuration, which trigger on this on instead of one defensive line, it has to trigger two defensive line. And what we saw here is it captured more profit, right? Because it didn't trigger the one here because it triggered once here, but it didn't trigger two at the same time. So then it goes up even more, right? So that's why here you see a different profit, right? Like more profit. So this is something I'm trying to master, right? This is why I built this tool, is to master what kind of rules are you most comfortable with? Where are your risks? Where's your reward? How do you want to define that? And so one of the things that I'm trying to build into the software is the ability to configure your buy and sell rules, right? Whatever it could be. It could be, based on moving average. It could be based on some structure, and just define that. And then you can play around with it based on different configuration to see, hey, how did I miss this, or how did I not capture the gains? Because again, there's two things I always focus on, right? Capital preservation, and two, how to maximize the gains. And this is the part we're talking about. How do you sell so that you can maximize your gains, with a rule that you're comfortable with? Yeah, yeah, yeah. That would be another idea, right? But that's the thing. I'm not sure if I want to go there, okay? Because I'll just share with you because I really believe that um it's hard to do that because if you start having different rules for different stocks, then now all of a sudden you may change your thinking, at real time, because you're like, oh, maybe that stock did that. Well, maybe I shouldn't do that here. Like I see a lot of people do that over the years, and I feel like that's a bad habit, right? I feel like, mhm, yeah, 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 yeah. So you can like my goal is to allow you to configure whatever you want, and you can create different configurations so that you can just plot them, right? You just plot the buy and sell rules and then see what it looks like, and then you can learn from it. You can learn from it. That's one of the things that I'm trying to learn from it is that, well, why didn't I capture these gains, right? What was the problem, or why did I not sell earlier? Things like that. So that's how you learn. At this moment, no. At this moment, is strictly based on, well, like I say, once, yeah, yeah. So, yeah, yeah, yeah. It's just, yeah. Go ahead, Steve. Yeah, and that's not my intention, right? Just so I just want to be clear with that. I really believe that the difference between you and me and every single investor and trader is not the platform, okay? It's the ability to understand how you trade and invest and where your failures are, right? And that's one of the things that IBD teaches is always do post analysis, right? But with this tool, like that's the reason I built this tool for myself and maybe for others too, is to be able to see where you make mistakes, to learn from it, right? Really quickly, because that's one of the problems I had with when I use markets. I keep having to plot those buy and sell points where I make mistakes or learn from it, but it just takes me too long. Yeah, 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 yeah. And also that, like, now you can type in any stocks, right? Like to based on whatever rule you have, and you can learn, hey, what's happening here, right? Let's see what's happening in Apple, right? And you can see, hey, look at this. Like this is crazy. Like one accumulation signal in the last how many months, right? It's just, even though that is a big heavy favorite of many investors, so it's just amazing. So you can learn a lot, right? From oh, okay, your buy and sell signals as well. So that's something. Yeah. Any other question about this? Mm-hmm. Yeah. Yeah, yeah, exactly. So here, Tesla, we can see some accumulation here, right? So there's some buying signal here, right? And then there you go. No, this is proprietary. Like it's something that I do on my algorithm to detect based on what, like I said, it's based on volume and price action, right? Mm-hmm. Mm-hmm. Yeah, yeah. Everyone defines like that's why like IBD has their own AD signal, right? Everyone does it differently, and I do it differently. So it's not going to ever be exact. So just so you know, it's a we call it AD, but everyone does it differently. So yeah. Mm, 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 right. Yeah. Mm, mm, yeah. Great. Um, So yeah, so again, I just show you a comparison, right, using different parameters where the second one sells on the second defensive line trigger instead of the first, and you're able to capture more. So that's why that's part of the reason, right? Like sometimes you're gonna have different rules, and like say for example, you have different sell rules, right? And sometimes you're gonna have more gains, but sometimes you're gonna have less gains. So it really like kind of depends on what's gonna happen. But overall, right? Which rules are most benefit for you over the long term based on the stocks that you buy, and that's something you can play around with to figure that out over time, and just learn from your own trading behavior, right? That's the whole idea behind this. The intention, as I mentioned, is not to build a platform that can do the work for you. It's to be able to give you, you know the things that you can set up your own parameters, right? But we do some work for you. As you can see, it already has some default configuration that does pretty good job. But yeah, it can be improved for every single individual depending. So just to quickly finish off my presentation here, like our roadmap is to the first report I show you, it was in Excel. We're gonna put that online so that anyone can see the accumulation distribution for all the stocks and also the industry groups. We're gonna work on also a weekly chart for people who are investing longer term. They can use weekly chart buy and sell signals as a parameters to buy based on weekly movement instead of daily movement. And then obviously, like Steven mentioned, it would be great if you can customize for individual stocks the buy and sell signals. Or, I mean the rules that you want, right? So that's really will help a lot as well. So as one of the things that I always do is I always focus on this, right? Sharpening your skills. So as we talk about using market timing, it really helps you understand when to buy from a general market direction perspective, as well as drill down to the stocks, what to buy, and then what industry and sectors as well. And then we talk about like when do you sell really, and that's it's related to when to hold. How do you know when you should hold? So those are the selling rules that we talk about in the second strategy, just to understand better, right? So those are the things we focus on. And just to recap what we do here, this is a website we just launched. As you saw just now, you need a Gmail account to sign up. It'll be free for 2 weeks. Um, there are other free services I offer, which is a free weekly market newsletter on our website. On YouTube, I try to make videos as often, but lately I haven't done as well. I did one on Sunday, but I didn't do one for a while now because of how bad the market is. It's really just yeah, nothing to talk about really. And yeah, I can help anyone who needs help on just mentoring and stuff individually. And here's my contact info, support at McBossCapital.com. Thank you, everyone.